As the Fed mulls over whether or not to raise interest rates this week, we take a look at one sector that doesn't get much attention by investors: small banks. Ted Peters, a former board member of the Philly Fed and current chairman and CEO of Bluestone Financial Institution Fund, tells us why he's optimistic about small banks. Ted, thank you so much for joining us today.
Great to be here, thank you.
So could you tell me a little bit about how the smaller banks have been more affected by lower interest rates than, say, their larger peers?
I'd be glad to. I should mention first, I was a CEO of 3 community banks for 28 years. I have a little bit of experience in this side. What's happened is rates have dropped. Loan rates have come down faster than deposit rates has. And so we're getting a natural squeezing effect on what we call our net interest margin. And so the profitability of all banks, but especially community banks, has been affected by low interest rates. So most of the banks have stayed what we call asset sensitive, meaning they're going to reprice loans faster than deposits when rates go up. So community banks are very well poised for greater profitability when rates go up.
Okay, and could you tell us about how they're better poised than their larger peers when the rates go up?
Sure, absolutely. Community banks have what we call very strong core deposits. They have great relationships with their clients, very close relationships. And because of that, there's a lot of money that's not overly price sensitive. So if rates go up 100 bips, a lot of these community banks will only have to increase their deposit rates maybe 30, 40 bips. So you'll get an increased spread. The larger banks, which have more money, which is more wholesale funding and more hot money, they won't have that luxury. So that's one of the reasons that our fund, the Bluestone Financial Institutions Fund, is we're really pretty positive on community banks right now.
All right, well, thank you so much for joining us today, Ted.
Great to be here. Thank you.
You're welcome.